All right. So, I did want to bring to the table here to people that there are a difference between standard insurance companies and some of the preferred carriers when it comes specifically to historic and architecturally significant homes. And there are some subtleties that you need to know, and you need to be able to ask questions of your agent or your broker. Most standard companies or direct writing companies like State Farm, Allstate, American Family, their standard products are not equipped to address the unique needs of historic homes. Next, please. Okay, we Paul went through the things that we're going to talk about today. Let's go to the next slide. We'll talk specifically. One of the issues has to do with building valuation. All right, when you have a loss on the home, you have to have a proper amount of insurance at the time of the loss. Now construction costs go up over time. So you may have picked a value years ago or months ago, and that value may change over time. Most carriers have a requirement that you have to at that time you have to be insured to at least 80% of the replacement value when the claim arises. If you're not, many companies have what's called a co-insurance penalty, and you can actually be penalized if you don't have enough insurance. Most preferred carriers will have a service that once you insure with them, they will come out, they will inspect your home, they will give you not a true appraisal, but an insurance appraisal, and they will come up with a replacement value of the home. With that, most of them will then guarantee the replacement cost of the property. So regardless of what it costs at the time of a loss, and regardless of what the limit is on the policy, these carriers will pay to replace the property, regardless of the coverage that you have. Next, please. All right. The other issue in replacement in loss settlement has to do with replacement versus what we call reconstruction costs. All right. Many of the functional elements to homes, especially older vintage homes, architecturally significant homes, have much higher costs to replace than newer homes. Example would be drywall in lieu of plaster walls, and other elements. So a preferred company will rebuild and replace your property at the same location using the like design, materials, and workmanship. They will not just give you a functional element. So if you lost flooring, they're going to replace flooring. I can give you some quick examples. I had a customer with Chubb at one time who had about a 3,000 square foot condominium unit on the Gold Coast. Had a small leak in his bathroom that traveled under some of the hallway flooring. The flooring was continuous throughout the entire unit, and they could not match it. So Chubb paid to replace all of the flooring in the entire unit. So what a normal company would have done would have gotten something close in style and design, and replaced a small amount. The preferred companies will go above and beyond to restore your home to what it was prior to the loss. All right. Also, they will also provide cash settlement options. Most companies require at a time of a loss that you must replace your property to get full settlement costs. The preferred carriers will pay in cash at the time of the loss. Next, please. Another big issue has to do with changing of laws and codes by the municipalities. As homes grow older, ordinances change, and you may be required to add things that are not in your current home's valuation. All right, without law and ordinance coverage, which is probably, especially in Oak Park, one of the important coverages, you may end up being out of pocket for those elements. So whatever it may be, there are municipalities out there that require fire suppression systems. They require certain ADA compliances. If they're not in your home today and they are required by ordinance, again, if you're not in your home, it will not be a part of the insurance because it's not a part of your current value. So this is an important coverage to make sure that you have on your home. Next, please. Causes of loss. Today, most insurance is written on what we call a special form, and it's written in a way that says that you're covered for all perils or all risks unless they're specifically excluded, rather than naming specific things like fire, windstorm, hail, explosion. So everything's covered unless it's excluded. You really need to be familiar with what those exclusions are. Also, some perils can be limited. For example, there will be some limitations perhaps on flood, earthquake, certain water damages, maybe vermin, bacteria, mold, those kinds of things. Most standard exclusions are pretty much standard through the industry, like wear and tear, settling of structure and structures, loss due to animals, intentional acts, neglect, war. We can go on, but they're pretty standard within the industry. Next, please. Like I said, earthquake, fire, and certain water damages are usually excluded or limited by standard companies. Preferred companies will allow those to be purchased back. It's very important if you are in a flood zone that you see what your policy provides. There are specific flood policies that are available, and then you can buy excess coverage over flood policies with certain markets. More and more companies today are, because of weather changes and climate change, they are limiting coverage on roofs. And I've seen cosmetic damage exclusions that if the integrity of your roof is not damaged because of hail or a windstorm, there's no coverage. I've also seen older roofs being settled at depreciated values rather than at replacement costs. So it's important to know what the terms of your policies are and to have replacement costs on those issues. Again, be well briefed on the terms and conditions of your coverage. Next, please. Deductibles is another way that insurance companies today are limiting their exposure to loss on your policy. Look to see, you may have multiple deductibles these days, rather than having, used to be you'd have a one deductible, say $1,000 for any loss. Today, they are putting different deductibles on water damage. They're putting different deductibles on wind and hail. And what that does is it's just limiting the insurance company's exposure and saving their money. Next, please. Sometimes these deductibles are a dollar amount, and sometimes now they're getting into percentages. So a lot of times on wind damage, you may find a percentage deductible, and you need to know, is that percentage, it may be 1, 2, up to 5%. It could be based on the building limit, or it could be based on the loss. So those are terms that you need to be aware of. Next, please. All homeowners policies have kind of different built-in coverages. Most preferred carriers have expanded coverage. All homeowners policies will cover your loss of use and your personal liability. I'll mention one thing about loss of use. Make sure that that your coverage is for your lifestyle. Try to get it beyond 12 months, because if you have a significant loss, it may take more than 12 months to design and rebuild your home. Also, again, I talked about earthquake, fire, and water damage. There's also coverage in there for valuable articles, some money, and security, identity theft. Know what those limits are. And they can be in preferred companies usually have much higher limits than your standard companies. You also can get coverage for kidnap expense if you travel. And also some policies will cover expanded landscaping coverages as well. Next, please. All right. And one of the most important things that I've found in some of these historic homes, and what we've done with some of, especially the Frank Lloyd Wright homes. All right, there may be elements to the home that have an intrinsic value or historical or artistic value, where you're really dealing with a piece of art. So things like custom trim, art glass windows, and fixtures, built-in furniture, built-in cabinetry. Those items can be dealt with on a valuable articles floater. And one of the things that I've found is, if you have a preferred insurance company, they have the flexibility to take those items out, insure them as if they were a piece of artwork. And there's an advantage to that. Number one, breakage is coverage regardless of what caused the breakage. And number two, there's usually not a deductible associated with valuable articles. And finally, with valuable articles, you will get at the time of the loss the market value, or the artistic value at the time of loss. Most companies will go up to about 150% of what you had scheduled it for. So and then finally, the rates on scheduled items are lower than building rates in most cases. So you may save money in premium by scheduling those items. Next, please. So finally, some of the companies that have specialized in this coverage for architecturally significant and historic properties include Chubb, Nationwide Private Client, AIG, and Cincinnati Financial. All have very similar programs. Chubb really created this market years and years ago. They're the platinum. They're really kind of the platinum standard. And what's happened is many of the executives that have left Chubb have gone on to these other companies and created a similar type of a program. Their claim services are really what I call concierge claim services. There's very little battling and fighting with the insurance companies, and it's just a much smoother process. So with that, I am happy to to answer any questions that you may have.
Fred, really great presentation. We do have a couple of questions here.
Sure.
Regarding utility service lines from homes' exterior wall meters to utility mains in right of way, can coverage be included as rider to a homeowner's policy?
I would say that I mean,
Yeah.
that's a question. That's a real specific question that I would have to get the specific answer. But off the top of my head, depending upon who is responsible for those lines, if you're responsible for those lines, I think that you can talk to your agent and ask the underwriter to include it. If the electric company or the utility is responsible for those lines, then it would be their responsibility.
Okay.
Right? But normally, and I'm just trying to think, because we had an issue at our property several years ago with a transformer in the lines, and I want to say the utility paid for it all. But if I can get the answer to that and get back to whoever was asking the question.
Sure. We will get that information to you so that you can share with them.
Mm-hmm.
A couple of other questions. Can you describe the difference between extended replacement cost and guaranteed replacement cost?
Extended replacement cost usually has a limit, a percentage limit to it. So you'd have to look at the specific policy. My experience is that extended replacement costs may add an additional 15 or 25% to the limit. So if you had a $1 million limit on your home and you had an extended replacement cost endorsement that added 25%, then at the time of the loss, they would go up to $1,250,000. Guaranteed replacement cost is unlimited. It's guaranteed to replace your home, like I said, with like workmanship materials and design, regardless of the limit on your policy.
Mm-hmm. Mm-hmm. Okay. Another question: if needed, how much should deductible be raised for a historic home?
Well, depending on the carrier, the deductible is the amount of money in a claim that that you retain, that you pay yourself up to a certain amount. It's always my recommendation to take a higher deductible to get a higher limit. All right, you're going to save premium dollars with higher deductibles, and they're depending on the company and your property, in the underwriting of it, which many things go into that. There is usually a sweet spot. I would suggest that if your annual savings on a deductible is not to go to the next level is not at least a third of that change. So if you go from 1,000 to 2,000, if you don't get at least a $333 credit on your premium, then I'm not sure that it's worth it.
Mm-hmm.
Because you want to have a payback. If you do have a claim, you want to have that payback on the premium dollars, and I look at maybe 3 years is adequate. But I would say that keep in mind that insurance companies will, if you have multiple claims, they will look at you, and after several claims, they'll either increase rates or drop you entirely. So that's why another reason is, insure for the catastrophe, not for the the daily maintenance. So, $1 million home, or above should be looking at a minimum, I would say, of $5,000 to $10,000 is a deductible.
Okay, that's good to know. Now, one thing that I had a question on when you talked about roof damage.
Yes.
Now, who determines what's incidental or cosmetic, and what is actually going to cause damage potentially?
Well, typically that would be the adjuster of the insurance company. The insurance company would come out and inspect. And what I'm saying is that standard markets now, have found. I mean, number one, there's some climate change, so we're seeing more hail, more windstorm, and they map it out, and they have their regions of, their high hail regions. It's incredible the way they can pinpoint where the exposure is. But then we also there are a lot of these contracting companies that come out after a hailstorm and start knocking on doors and say, "Hey, I see you have some roof damage." And so the companies are really kind of fighting back against that, to say, "Hey, if you've got some dimples in your shingles and it's not affecting the functionality of your roof, we're not going to pay for it." Again, the standard or the preferred markets, your Chubbs, your Cincinnatis of the world, really aren't doing that yet.
Mm-hmm.
But we are starting to see it, in the marketplace. So,
okay, great. Any other questions for Fred? Fred, thank you so much.
Thank you, and thank everybody
for presentation.
I want to thank everybody for joining us. I know insurance is not the sexiest of all subjects, but it is crucial, and it's important to be insured properly, because when the catastrophe comes, you want a carrier that's going to respond adequately.